All right. Well, welcome to our our new monthly ACAM mentoring and homeowner liaison meeting. Today, Veronica Sandoval is going to be taking a lead at reviewing or discussing how to read and understand the financials that our company produces on a monthly basis.
Yes. Well, thank you everyone for coming. And I do want to start off with, don't be too hard on yourself. It takes some time. Every month when you get these and you're looking at them, you'll put it together a little more as you go through the process of looking at the financials. Financials are one of those things that I consider dry, like reserve studies. They're not fun to look at. They're not entertaining. It's just a bunch of numbers and words. So I'm going to go ahead and share my screen. And so I have a set of financials ready to go over. All right. So everyone should be able to see my window with Belmont Terrace financials on it. These are for the month of August. Typically what I do is I review this wonderful cover page that the accounting department puts together. They make it really easy for you to look at the high level things without having to dig down through the 30 pages of the financials. And they'll point out important information for the board or the manager to discuss with the board at a meeting. So they do go through, they let you know what your balances are right here. They give you that snapshot, as well as your reserve cash balances. So just so everyone's aware, an association has to have two bank accounts, one for operating cash and one for reserve cash. Reserves and operating cannot be commingled. That is a legal requirement. So that's why you always see two. For some associations, you may see more than two accounts. You might have a settlement account, a special assessment account, but that's a little more complicated. So we're going to just try to keep it simple today. And then we'll take questions at the end. So if you have questions on a particular item, just write down, the page number, the title, and then we can circle back to those later. So one of the items that accounting mentioned was that there's a amount owing to reserves from operating. So that's something that the board has to be aware of so that we can make that transfer later on. So here's pretty much what I'm going to call the meat and the potatoes of your financials. This is what you really want to be focusing on. So at the very top, you have your operating. And so it'll show $148,471 for this particular association. And so I've gone ahead and highlighted that so that everyone can see. And then you have your, and so I didn't do the total because once you subtract the amount due to reserves, it would be the $95,000. But here's how much they actually have in their operating account. And then if you go down to your reserves, the actual amount is the $600,000 plus the 93. So it's about $693,000. $694,000 if you don't take into account the funds that are owed from operating. Have I lost anyone yet? Okay. So typically I try to keep 3 months of monthly assessments in the operating account so that we have enough cash available to pay our bills. You typically pay your insurance lump sum once a year, and there's other items we would pay throughout the year that are lump sum payments. So we may not have enough funds if we only keep 1 month of assessments in our operating. So then as you go further down, they'll talk about other components such as other assets. So you have accounts receivable, which is really delinquencies. This is the amount of assessments that has not been collected from the membership to date. So for this particular association, they have $7,446.30 outstanding. And then we have an allowance for doubtful accounts. So that's a little bit confusing because you're definitely using accounting terminology. And basically what happens is this is an amount directly from the association CPA when they did the taxes previously. So they will tell us how much we should account that we may never collect. These could be accounts that are in collections. And so this number will fluctuate every year. So they're saying you have $7,446 of assessments we haven't collected, which is an asset because we anticipate to collect that money. And then the CPA will say we have 2,000 we may never collect. So they want to make sure that we keep that in the back of our mind just in case, and we plan accordingly. We also have taxes that have been paid in advance of $820, so that's an asset. Until those taxes become due, then they'll come off this line item. And then other receivables could be something that the association may not have paid for yet, but they've taken the income for. That could be keys, that could be clubhouse rentals, that could be parking permits that a homeowner has purchased. And then they have prepaid insurance. So even though they pay for the policy, typically in a lump sum, not monthly payments, the accounting department will spread it out over the remaining months left. Because if they were to cancel tomorrow, they may get a credit back for the remaining months on the policy. So then that will leave you with total assets of $107,000 month to date. So they basically go ahead and take their cash and then just add all of these items that would be considered assets. But what I tend to focus on is this number right here. This is the hard number. You would compare it to what's in your checking account. And then the $747,000 is what you would compare to like your savings account because it's long-term funds. And so then you're going to also have some liabilities. And so liabilities are funds that if something were to happen to the association tomorrow, they'd have to come up with this money to pay it back. So anytime a homeowner prepays their assessments and they're not due yet, it becomes a liability. So we have some homeowners that pay a year in advance, some that pay a month in advance. So until it becomes due, the association's liable for those funds if something were to happen. Let's say the HOA dissolves tomorrow. They would have to give those funds back to those individuals. And because this is a new HOA to us, we still have prior management, prior owner prepaid. So that's currently separated until that's all worked out. And that's not something you would typically see on your financials. So then accounting will come through and they will go ahead and give you your balances again. And then they'll give you your total net worth, including your income, and let you know. So right now the association has about $854,624 available to them to use. And always keep it in mind, you know, operating is for operating expenses, your monthly bills. Reserves is for those long-term expenses that come out of the reserve account. And I also want to point out, when you're looking at your operating cash and your reserve cash balances, these will not match your bank statements. And that's a question that board members typically bring up because they would expect it to match. And so it doesn't match because you may have outstanding checks. You may also have owners that have, you know, paid and we haven't accounted for it yet because it came in between, you know, the date. There's like a cutoff day. So that's why it doesn't match. So always keep that in mind. So then the next item that I always look at is your income and expense statement. And this is broken down by 3 columns. The first one is month to date information, year to date. So this is a fiscal year end of December. And then it gives you how much the association has budgeted. So what I typically look for is under expenses. I'll look for any anomalies for the month and for year to date. So one of the anomalies I had mentioned, I pointed out, was management contract. Contracts typically should always match, the expense should match the budget. So in this particular case, the association budgeted $2,100, but they're paying $3,220. So I always like to drill down and look, is there a mistake? Was something else coded to this general ledger an error? And so in this particular case, they just came over to Collins a couple of months ago, and our management fee is more than what they had anticipated to pay for 2023. So that will explain that overage. Another item to look for is not just overages. It's when you have items that have not been paid, so property taxes. So going through these financials in detail for today's presentation raised a red flag for me that how come we haven't paid our property taxes? And if we have, maybe it was billed to another general ledger. So I have to look into that. But that's always something good to keep in mind. You might have a vendor that isn't sending in their invoices monthly. So this is a way to be able to catch it. You know, your landscaper might be missing a monthly invoice, pool company, you haven't paid your property taxes, your pool licensing fees. So it's always good to look at, you know, any anomalies. The other thing I wanted to mention is when the association budgets, they'll budget for the expense for the year, but weed abatement is a one-time only expense. So right here, we're over year to date, but that's because we paid one time and then we split into 12 monthly installments. So for this, this item, water, we're typically over year to date because it's a seasonal cost. And then by the end of the year, it should even out. Now, in this case, for weed abatement, it was over $2,400 than what they had actually budgeted. And that can happen. And so after I look at, you know, any of the anomalies, I will look at the total expenses and compare it against the budget amount. So month to date, the association's about $500–600 over budget, and year to date, they're about $28,000 under budget. And so if that's a red flag for you, depending on how far into the year you want to go back through and see, okay, you know, where haven't we spent money? I know we didn't spend $7,000 for my property taxes. And so that's always good areas to look at. So before I go on, does anyone have any questions or need clarification on what I've gone over so far? No? Okay. If you do, just unmute and stop me. And so there's the same spreadsheet for the reserve fund, but I don't really pay too much attention to that one because these are reserve expenses and there's not as many as operating. It's not as frequent. So then another area you want to take a look at is your receivables. And so these are homeowners that have paid in advance. And then your receivables aging. So these are the homeowners that are behind in their assessments. And so last column shows you the total. So you do want to take a look at this to make sure, one, if they're behind in their assessments, they're getting the late letter. And if they are at the 90-day time period, that they are being moved through the process and being sent to collections. You might have some homeowners that owe $18, $4, 26 cents. You typically will see this at the beginning of a fiscal year when a budget goes in and there's an increase or a change in the assessments and homeowners will forget to update. So I always keep a look, and if there's a high trend of it, I'll put in the newsletter or we'll send an email blast just as a reminder to catch those homeowners that are not paying the full amount. And then something to just glance at. This is the history of checks that have been paid for the month of August or that have been cut. So you can do a cursory review and look at the vendors. You can look at the amounts because this will help you catch things before it's too late. Mistakes can happen. You might pay a vendor that really wasn't a vendor for the association, or the amount is off. So it's always nice to just give this a look. And this lets you know what checks have been cut for the month. And it gives you the detail, what it was for and who it was to, and you get the check numbers. So it gives you a good reference. So earlier I was mentioning that the amount in your operating balance sheet would not match your bank statements. And so if you look at the bank reconciliation, this will tell you what's outstanding with regard to deposits and any checks that haven't cleared. And then it will give you the actual balance once they add any outstanding deposits and subtract any checks that haven't cleared. And this amount will match your bank statement. So for month ending August 31st, we have $148,471 in operating. So if you go down to your bank statement, oh, I said it was going to match, didn't I? And I have 151. Oh, I apologize. So it's 151,773.30. And so here's your ending balance on your bank statement. And then once we go through all of this, it'll take you to the 148,471, which is on your balance sheet that we talked about earlier. So I'm going to go up really quickly. I don't want to confuse everyone, but I'm going to go up really quickly. And there's the 148,471. So did that make sense to everyone? Okay. Any questions? All right. So I'm going to go back to my bank reconciliation. And one of the items that you should also be looking for on your reconciliation statement is this is important to look at, but accounting will always catch that. And if there's a difference, they'll let you know. I always look at the dates. Are there any outstanding checks from June, July, March? If there's an outstanding check from earlier in the year, you're going to want to go ahead and flag that and try to find out why. Maybe the check was lost, the vendor never deposited it, and kind of get that resolved so it doesn't stay on your financials. And so then I will go down, and this is your detailed general ledger. So when you're in Strong Room and you're looking at invoices, typically, the CAM does this, and they'll code invoices to particular accounts. So landscaping contract is coded to landscape contract. So these are all the general ledgers that are used. And so I typically don't look at the deposits. These are deposits that are coming in from homeowners, as well as any automatic payments being sent to utilities. So I kind of scroll right past those. And I will look at my expenses. And so this will show you a detailed expense by general ledger. So this helps when you're looking at your income and expense statement that I was talking about earlier. When you have an anomaly, when something is over budget for the month, you can always scroll down to your detailed general ledger and find out what was billed to that GL to find out, was it a one-off? Was it an error? Or just as a refresher. So sometimes we might forget that we did this large repair, for instance, general maintenance and repair right here. We had a large repair, a total of $4,395. So we might forget, and we want to know why that item is over budget. So this will give you the answer to it. And it's a quick reference. You can also look to see that your water bill is being paid, how much. And then it'll also show you any reserve expenses. And then at the bottom is the collection status report that you discussed with the board in executive session. So I'm going to go ahead and jump right back to the top. Let's see. So I pretty much went over everything I wanted to go over. So the board, when they get these financials every month, they have an obligation to review certain parts of the financials. And it was the reconciliation of the operating accounts, which we went over, which is the bank reconciliation, the reconciliation of the reserve account, the current year's actual operating revenues and expenses, their balance sheet. And so we want to make sure that when we're typing up the minutes after a meeting, that we mention that the board has reviewed these items and that they're approving, accepting the financials that we're presenting. And so we're going to go ahead and send over a resolution, a sample resolution for you to use when you're doing your minutes to ensure that it covers the legal requirement for the board that they are doing these steps. And if the board isn't doing it, they would designate it to the treasurer and another board member or to the finance committee. And the finance committee provides a report to the board. And then I know ACAMs typically don't code invoices in StrongRoom, but if you do, you want to make sure that when you're coding them, you're using the correct GL. So I know earlier I talked about, landscaping, a landscape contract, gutter cleaning, verify that, it's coded to gutter cleaning. And if you're not sure what GLs to use, I'll pull up the current budget. And that will let me know what GLs the association has budgeted for. And that way I can always double check to make sure I'm coding to the right GL. And so this helps because if you find that something was miscoded, then you have to reach out to accounting and they have to do an entry in the books. And that can cause a little bit more work for you as the ACAM and for accounting. And one of the things that we really want to make sure everyone kind of keeps in the back of their mind is when you're also coding in StrongRoom, if you're coding a reserve expense, you want to make sure to change the bank account to be the reserve bank account. All righty. Any questions? I'm sure there's a lot of questions. And I think going over it gives you a basis for the information, but I think the questions will help gain more knowledge on the financials. So what was something that you've seen, that you've come across when you're looking at the financials that you want more information on? Roman?
So one of the things when I had to handle a meeting was I had a board that asked me all kinds of questions about all of their CDs and related monies that I don't know how long they've been in there. Like it was a fun conversation to have. They're like, well, we have like 600K and all these different things. I go, that's really cool. I hope the manager knows all about that for when you see her next month. And I just kind of had to just play it off. Will any of that information be relatively easy to point to people or the board when going over the financials?
It depends on the institution that they're using.
Mm-hmm.
Typically, It's on your bank statement. So I don't think this particular HOA has CDs. So after all this, wonderful pages that accounting gives us that are created in Condo Manager, you'll see the bank statements. And so I don't think they have CDs. Let me see. I don't know if I can, if you tell me one of your accounts that has CDs, I can try to pull up those really quickly.
Sure. Let me see. Because the easy answer would be there would be.
Oh, here we go.
There would be one of these for every single one that they would have at the bottom. And that's the real answer. Okay. So they're on it somewhere.
It should be on it. So right here, they have insured cash sweep account. It's not a CD, but it is a separate type of account. So it lets them know the interest rate and then their opening balance and their ending balance. But it doesn't give you, maturity date, when it started. So if you give me one that has a CD, I can pull it up and then we can go over that. I think that's great. That's a great question.
Okay.
Let's see. And what I always do if I don't know the answer, because sometimes, you're on the spot, or it's asking a lot of questions, I just always let them know, I'll check and I'll get back to you on that.
Right.
I always feel it's best to just say, I'll check and get back to you, rather than saying, I don't know, or answer something and you're not sure. So what's the HOA that
I know the most recent one that we had was Heritage of Claremont, but I can't see if I got sent the financials of that. But another follow-up question would that even be that something that would be an item of interest being added to money? It would just be part of their savings. That's where the funds would go, et cetera, et cetera.
Well, it depends on if it's a operating CD or reserve CD. Typically, they're reserve CDs. So Heritage. I'm sorry, you said Heritage of
Claremont.
Of Claremont. I don't show bank statements in here.
Yeah, I don't think we got this one yet. But yeah, I know that we had all this fun stuff. I don't think the other one's renewed yet because they don't got any money, but that's okay.
I don't see Heritage of Claremont in August.
Yeah, I don't think we have them yet.
Okay.
The only thing I would say about CDs is it's good to keep track of the maturity dates, because you'll want to make sure that the board meeting before the maturity date, you get direction from the board on what they want to do with those funds. Most institutions, if you don't give them direction about what to do, it will automatically roll over for the same term that it was started at. So for example, if you invested it for a year, no renewal direction was provided, it could roll over for a year. And that could be problematic if the association has, for example, big projects coming up that they're going to need to utilize those funds. So it's good to keep those CD maturity dates on your annual calendar and then make sure that they get onto the agenda for board review and direction.
Hi, Jessica. You have a question?
Good afternoon, everyone. I'm here. I'm just listening in. I know that there are associations that elect to use outside resources for their CD investments, like Charles Schwab, Merrill Lynch. And those statements are traditionally included in the financials. I'm curious if there was an opportunity for our team to put the maturity dates on those line items in the financials, in addition to the Alliance bank accounts for ease of review.
On the balance sheet?
Yeah, but let me pull one up.
Here, I'll
And the
share
same-
my screen again.
Yeah, okay. You know how they put the maturity dates on the Alliance investments?
So like under action items right here.
No, they're traditionally under, if you go
It'll
down.
be it'll be under reserve cash.
Yeah,
Where go back up a page.
Right. Oh, I see. Okay.
Yes, it'll.
and they tend to put the maturity dates there for the Alliance ones. I'm curious if there's an opportunity to put them there for the others.
We can ask the county.
So we can do. Thank you.
Of course. Any other questions? I'm sure there's questions, and all questions are great questions because financials are hard. It took me a long time of just, scrolling through them month after month over the last 23 years and just, looking up some of the verbiage and trying to piece it together. Financials are like putting together Thanksgiving dinner. Everything goes together. It's just in different places. I mean, Costco for the turkey, Smart and Final for the puff pastry, Safeway for that special spice. But it all comes together. Nicole?
I did have a question about when the operating has to borrow funds from the reserve versus a underfunded reserve transfer. That's usually like on the first page of the financials. And then you were also discussing, so those are two big things. And then if the board wanted to do a resolution, what does that mean in terms of, for an ACAM, like how should they capture that in their minutes? And then like, what is the resolution actually making, and why is it important to get to accounting?
Okay. So the resolution wording, I can look that up and send something over along with the resolution I said I was going to send over earlier. And so I'm going to answer the last question first, and I'll go back to the first one. It's important to get it over to accounting in the minutes because if something happens in the financials, and you might have some boards that come along, a year later, 2 years later, even the current board, they may not remember things. And so it's important to have that document in the minutes and then sending that to accounting so they can transfer funds over. Because they actually have to do transfer of funds. So in this case, right here, operating owes reserves. So once we have enough funds, and right now we ideally could have enough funds. I haven't dug into this enough, but we would make a transfer from this one operating bank account, which is completely separate from the reserve one. And so that's why we want to make sure, one, we provide it in the minutes, we send the resolution to accounting, because that transfer will be documented in the records. And we don't want the board to say, well, why are you moving our funds around? And because reserve funds can only be used for reserve expenses. Operating rules are a little more lenient. You use them to pay for operating expenses, but you might have an expense that's not on the budget that you're going to pay out of operating. Reserves has a lot stricter parameter where you really only can pay for reserve items that are on the reserve study or long-term expenses. Maybe you forgot to add roofing in on the reserve study, but it's still a capital expense. And so did I answer your question enough? Was that clear? Nicole?
Yeah, no, I was asking more for the newer ACAMs so they know how to properly capture those things in the minutes when this happens and when they see it happen on accounts. I was asking that question not necessarily for myself but for others. Because I've taken over an account where there was an underfunded reserve transfer. And accounting put on my balance sheet, the first page, they said, hey, We need to know what resolution the board wants to go with for this $18,000 underfunded reserve transfer, as opposed to if they had to borrow the reserve funds. When they borrow it, they actually have to pay that back. You can't necessarily write that off. You have to pay it back. But an underfunded transfer, you can use the correct verbiage. So I was thinking that would be helpful for newer ACAMs. And if they move into a CAM status, like I had to go back and review what the actual vote was, and it was to address this in the 2024 fiscal year. So then I had to say, okay, it was an underfunded reserve transfer. It wasn't a borrowing of funds. So then the board can make this resolution and adopt it. And then I can send that to accounting. And it was able to clear up their balance sheet a little bit. But I think it's important for ACAMs to know that if they have to notate it in their minutes.
It is, and I think those are two great points to bring up because they don't happen sometimes often enough. So when you have a borrow from reserves to operating, it's because your operating cash has fallen short. The association may have, spent too much money in the prior years. They didn't budget enough. Something's happened. And so you have to pay your insurance or water. So then you will borrow from your reserves. And that really is, last option. But if you have no choice, you have to borrow from your reserves. The law says that the association can do that. They have 12 months to repay that borrow. And it has to be noted in the minutes so that the members are aware that they are borrowing from reserves. And then the resolution for unfunded reserves, let's see. We actually have that in this particular association. So maybe the association is spending too much money in operating and they don't have enough money to make their monthly reserve contribution. And so accounting, they keep track of this. And in this case, there's $30,000 that should have been transferred to reserves by the end of 2022. And that didn't happen. So the board can, one, make a plan to pay those funds back in a different fiscal year, 2023, or they would adopt a resolution to say, yes, we didn't transfer these funds and we're not going to transfer them at all. And so it's important because now the membership is aware that the association did not add the $30,000 to their reserve account as they had originally disclosed to the members and budgeted. I would compare this to, when you get your, monthly paycheck and you put $300 aside in your savings account to go on a trip. And some months you can't do that. So you don't do it for 2 months. So you basically owe yourself $600. And you either say, okay, I'm going to make up those $600 to put into my travel savings account, or I'm just not going to do it because I can't afford it. So that's what this unfunded is. And so I did see something in the chat where I think Brad and Melanie had sent wording on it. And so if everyone wants to grab that, or we can always send it on a group chat, on the Google chat, we can do that as well. Any other questions?
Just one other thing I'd make note of is that let's say you get to the end of the year and the association still cannot repay that money that they borrowed. You can do a notice your membership by putting it on the agenda and explain that you weren't able to pay it back and then extend that deadline for repayment. Mm-hmm. So it doesn't have to be done in 12 months, but you need to make sure that you at least notify the membership what's going on after that 12-month period.
Yes. And you can always work with your CAM or, someone else who's, been in the industry for a long time. We've probably gone through it and we can, also help provide guidance. We're always here to answer questions. Brad?
Veronica, I think you're doing awesome. You've brought up a lot of really good points for the ACAMs. And I just want to emphasize a couple things that you had already hit on, because I think this is important for ACAMs to understand and help out their CAMs. One of them is the maturity dates for CDs. As you are aware of maturity dates, as you know what those maturity dates are going to be when the financials are released or whatever, put them in the punch list. Put it in as a to-do item in the punch list. Put it on the calendar for you and your CAM 3 weeks in advance. So if the maturity date is, October 31st, you should already have your instructions over to accounting by the 12th, letting accounting know how you want to roll it over, because how accounting operates, and especially how our relationship worked with the bank, they needed almost 2 weeks in advance. So instructions and renewal dates, put those on calendars, put those on punch lists to help remind you guys. Don't let those maturity dates go by the wayside. In a prior life, I had too much banking experience, and what we would do at the bank is, as CDs would renew for 12 months, they would not renew for the promotional rate. They would go back to the regular rate. So you want to make sure that you give instructions to get those promotional rates. The other item I wanted to hit on is in regards to the financials and distributing these financials to the board. Sometimes the board wants to do a power play and make you or the manager feel a little less important, or kind of put you in your place by asking some obscure financials question in the middle of the board meeting. That's not the time and place to ask those questions. When you send these financials to the board, be very specific. Say, hey, these are the financials. Review them now. I don't even include the full financials in the board meeting, in the board packet. And I let my boards know. I said, hey, if you have questions about the financials, ask me before the meeting so we can answer any questions that you guys might have. I want my board to have conversations about the financials. I don't want them to sit there and ask me, well, was the very first time we took the CD out? Like Roman was asking. That's a bullshit question. That's not for you guys. No, they can ask that. They can ask that question offline in an email. They don't need to ask that in a meeting. Don't be caught off guard. Let them know, say, hey, why don't we move that conversation to an email? Is there any other questions about the financials, or can we approve them as presented? That's how I move the conversation along and not get sidetracked by obscure questions about the financials in board meetings. Just wanted to bring those 2 items up.
I think that's a great tip, Brad, because they do that, and you're scrolling through pages and you're like, oh, I don't know, let me look.
Yeah, and it makes you look dumb and unprepared and wastes time and all this other stuff. No. You need to train your board to use your time and their time better.
I agree. And there's nothing wrong. What I usually do when a board asks me like the maturity question on an email, I will do a little snippet and show them what page it's on. Everyone knows how to use the little snip and sketch. And then I'll just cut and paste it into an email and be like, here's where you can find it for future reference. Here's where it is. I'm happy to help you. Just in case you have this question at 3 a.m, I'm not available. I want to help you, help yourself find it. So, April, I saw your hand go up.
No, Brad had answered it.
Oh, okay. Awesome. Thank you. I love this. Everyone's giving input, and because we all have, great ways on how to address the questions and, reading the financials and understanding them. Any other questions? Everyone's good on the financials. I know it's going to take time. So like I was saying at the beginning of our meeting, don't be too hard on yourself. Take a set of financials that, is pretty standard, doesn't have any of this due to, due froms, and, different accounts on it. And then just kind of look at the numbers and just see how they match up. And I'm always here to answer questions. If you have something you think about later, you come across. And I know Lonnie did a Google video. Sorry, not Google. YouTube. Sorry, I'm getting all the terminology. A YouTube video on how to read the financials as well. So if you have time, I would definitely take a look at it. She goes into a lot more depth on the terminology of these items, such as, the allowance for doubtful accounts and some other things. Because, that's her niche. She is, the accounting professional. We should be able to read the financials and understand them, but there are, of course, some terminology we won't know. All right, so I'm going to stop sharing. And if anyone has any other questions. No, I know. The financials are so boring. I know. All right, well, I'm going to turn over to Melanie. Thank you, Melanie, for the opportunity. Thank you, everyone, for your time.
Of course. Thank you, Veronica. You did a great job going through those financials. And I think it was awesome too for us to be able to see your process and how you go through and what you look for in a set. I will share the YouTube link that Lonnie put together for how to read the financials as well. And I love the little hands that keep clapping going up. Sorry, I'm getting distracted. But yeah, if anyone has any questions, we're all here as resources. So feel free to reach out to any one of us or your regional manager. If you're in a particular office and you have a question, you can go see them or send one of us a chat. And we'd be happy to make some time to answer anything that you guys have. Well, with that, thank you so much. And I hope everyone enjoys the rest of their day.
Thank you.
Thank you. Have a great day.
Bye, everyone.
Thank you.
Bye.
Bye.